Hello, this is Todd Foster, and this is your market wrap for the weekend in November 30th, 2018. Well, market continues to kind of just flounder around. Really, nothing's been cleared up basically for where we are right now. We did get one of the news items out of the way that we spoke about last week was the Fed Chairman Powell on Wednesday spoke at the New York Economic Forum, where he backed off his very hawkish stance from October that made the market, do this whole thing down here. When he said that the Fed funds rate, the interest rate that the Fed controls, wasn't even close to neutral. What neutral basically means is a rate that's neither accommodative or restrictive to growth in the economy. And usually that means it's kind of like a pausing situation, or at least not a pause, but we're going to evaluate from here, really look at the data. If the data starts picking up again, we continue with the rate hikes. If things keep softening like we see in, housing is one example. I think it's been bouncing, but, this is the housing index this year, okay? So if they continue to see things like this develop, they might just slow up a little bit. So that was enough to have a huge rally on Wednesday where the Dow was up 600 points on that day. So that made me curious. I know this, but I wanted to actually go back and show you guys the stats. But believe it or not, the biggest rallies happen during bear markets. They don't happen during bull markets. Bull markets are kind of more of a stair step and slow and steady kind of move. When we get these really outsized moves where you think, oh, wow, 600 points, everything is great. No. So here I'm going to show you on this chart. I think, yeah, this is in your screen. First, a lot of interesting things here, but this is the largest largest up days in the market in the Dow. Okay, so here is this week. See the 617 point up day? And when I just showed you, this is where it happened, right here. So is that bullish? No, it really didn't change much there. But we still have, look at 2008. I won't get to that. 2015, we had a big correction in the market. 2008, 2000, 2009, 2008, 2011, we had a big correction. Remember, it was almost a bear market back then. 2002 was coming, that might have been coming out of the bear market back in 2002, but it was still in the bearish phase. 2008, bear. 2002 was a bear. 2011, I spoke about, was almost a bear market, so bearish phase. And then the other interesting thing is how come in 2018 we've had 1, 2, 3, 4, 5, 6, 7, 8. 8 of the 20 largest Dow up days happened in 2018. So let's go back to the chart. 2018 is right here. So in here, in all this mess, which is, I don't know if you guys can see, but this doesn't look like a very bullish kind of market. Yeah, the big drop at a recovery and another big drop. So you can see that almost half of all the biggest up days in the Dow, in the history of the Dow, happened this year. So and then we see the other ones happen in 08, 09, 02, and we know about those years. So is that telling us something here? So we're going to have to key on that. So, of course, we got a sell signal. I think it was here. We had to raise some cash again because, again, this is acting too squirrely for us not to have some cash until things clear up a little bit more, and they haven't. So you say, oh, the 600-point up day. But as you've seen, and I showed you the facts, most of those big up days happen during bearish phases, which means this gets wiped out. Now, I don't know if that's going to happen because the next big event that we have is President Trump and President Xi, I think I'm pronouncing that right, is going to have a dinner on Saturday night to discuss the trade war with China. Now, the big thing China probably wants to stop is, I don't know the exact numbers, but Trump's getting ready to raise from a 10% tariff to a 25% tariff starting on January 1st. I have a feeling that's what the Chinese probably want to avoid. But for that, Trump's going to want some things on their side, and I don't know what they're going to do as far as that's concerned. They want to stop the intellectual property theft, some human rights thing. I don't know. I don't know enough about the president of China to know how strong-headed he is. I would assume they're a very proud country, just like us. We're one of the big superpowers. So let's see how this goes. And of course, we know Trump is a volatile guy. So, he's even on, I think yesterday, the news feed was crazy. It was one time, we'd like to do something. Oh, I don't know if I'll do something, though, even though if he wants to do something. So what that means to us is, especially under all this resistance, you guys see all these moving averages. These are very important. This is the 250-day, the 200-day, the 50-day, the 60. You see all of this in here, and then all this resistance through here. So anything could happen here. If somehow they work out an amazing deal, then maybe this blue count is real. The green one is really in play. A, B, C. This was wave 1, wave 2, and we are going to be blasting off in wave 3. And we'll know that reaction as early as Monday morning. And clearing through this junk in here, through these moving averages, which if we're in a bear market, we really shouldn't. Okay? But if we clear through that, that would give more evidence that this was just a midterm correction and we're going to new all-time highs. But we'll wait for the reaction. We don't guess, okay? Guessing is not something that we do to manage your money. So we need to work on signals. And when you guys clearly see what we're coming up against here, let's see how the market reacts on Monday. Because easily, what should typically happen, given what this is, this should stop everything and we should come right back down again. Okay, I don't know if that's going to happen. I'm staying open-minded. Like I told you last week, I got to stay about 50-50 right here. But as you can see, this is why we're not saying, oh, a big 600-point up day. We got to be all in the market. No. Okay, and I showed you why those bigger up days happen mostly during bearish phases. Okay, now the bearish, there's another scenario here, which was the this was the top. This was wave A, and we did the little red A, the little red B, and we're going to come up just a little higher. And I can even move this B right to here. And so maybe we could have some reaction, and then all of a sudden everyone says, oh, it's not enough, and then we start to roll over again. So that's another scenario which would lead a little higher, but still roll over if we had positive news. Or the bearish scenario, super bearish situation this was little blue A, little blue B. We've done wave 1 down. Wave 2s often make you think, oh, you got to get back in, and they make you feel like, oh, you're wrong, you got to get back in, and it makes you feel good kind of thing. And all that it does is it's before it drops again. And if this blue one plays out, we're heading to those much lower targets. I took those off for right now because we are holding, and I don't even have an edge, to be quite frankly, be honest with you guys. When you look at the S&P just on this simple kind of chart, these moving averages are extremely important, and we're sitting right there. So we could even push up a little more into, Monday, but we really got to clear over this 27.75 area to really get things going. And we'll just let the market be the judge. You can see that the MACD was very oversold here at -60. And now we're coming back to the zero line. Amazon's another one that it's a market leader, so we always want to look at Amazon. And I just wanted to show this resistance. So, clearly this was a little top here, backed off, broke out, tested. So this line right here is very important. And then you can see we broke above it, broke below, got a little above it, then we failed again, rolled over. And as you can see now, the 50-day, or this is the 65-day, is coming right down to that line, plus we got the 200-day, it's sitting right underneath. So Amazon's got a couple, maybe another $100 of upside, and I know that sounds awesome, but really in the big picture, it needs to get above 1,800, just like I showed you on the S&P, getting above that 2775, 2800-ish. Otherwise, this is typically, if we're in a bear market, where we would roll over again, okay? And you could also see that this MACD is coming up. So we're in no man's land is what it basically boils down to, and we have to let the market show its hand and we go with what the market says. So that's where we are basically in the market. Now, the Fed, what they said was we're going to hike in December, basically. That's been priced into the market. So we're getting another quarter into the December meeting. But then I think what the reaction in the market, why I was up 600 points, was we'll probably be at neutral there, which means we'll probably pause for a second, catch our breath, and see where we are. And that was enough for the market. The market needed to hear that. Now, some people are going back and saying he didn't really change much. But again, I don't care about economists. Economists never get this stuff right with the stock market. And they thought that maybe it wasn't as dovish. I go off the market. The stock market to me is the end all be all when it comes to what is happening in the world. I don't care about opinions. I care about the market. The market reacted positively. Therefore, the market thinks it's good. So now what that also did was put a little pressure on yields, on bond yields. And we've been showing you this is the 10-year note yield. It's very important for mortgages. It's what most people track when you track interest rates. But as you can see here, they're not going up. So this is saying, even with the Fed saying they may pause, it's not baking in any inflation. And that makes me think, did the Fed already go too far? Because if the Fed says, oh, we're going to hold back, you would think inflation pressures, you would think yields would start to move up, give some time for the economy to start going again. But yet the opposite's happening, and yields are actually coming down. We also saw the dollar, I think, come down yesterday. It's back up today. But let's see. Dollar's been moving up with the trade war, right? So let's see what that means. But you could see that big move. See that big move down in the dollar? That was on Wednesday when the Fed said that. But anyway, so why are yields falling? So we're going to have to watch. Now, it looks like this pattern to me, it could be complete. This was wave 4, and we're going up in wave 5 still. This is not the 5. And this was wave 1, A, B, C, and we're done. And I can move the C up here. Let's see. Something with the trade war could affect interest rates possibly. So we'll see on Monday again. But the more likely scenario now is it looks like this just wants to come down to all the support. You see this breakout we had? This was that big, this was this support line, and this is that big neckline I've showed you that goes all the way back like 4 more years. So this is general zone in here. If you're in real estate, that 2.9 and a half, 2.9, 2.85, somewhere in here, if you're doing any short-term loan stuff or mortgages, you may want to, start keying on this 10-year, and when you get into this zone, it might be a decent spot to do something like that. Of course, if we go in a recession, this could all break down, and yields would just keep falling. But if we still have that midterm correction scenario, we're going to new all-time highs, they get a trade deal done, the Fed is easy, then maybe this is going to turn back up, and this might be a decent area. So we'll see how that goes. Gold and silver, really not much to see there. Gold's still holding above 1,200. It did have a nice, it did. You see that this updates later today, so we're not seeing today's action. I think it's down a little bit, but we're holding above this 1,200, above the moving averages, right? Yeah, above the 65-day moving averages. So okay, but this does look very A, B, C-ish. So if it breaks below 1,200, we're probably seeing a new low. We're still pretty comfortable with this position. Given where we are. If the Fed pulls back, it could build inflation pressures, which will be for gold. If something happens where we're really going into a bear market, gold should get supported in that as well. So also could be a 1-2, 1-2, and it's getting ready to explode. But right now, above 1,200 still, so not too worried about gold, but it's not doing much either. Silver, I think, is bouncing along the bottom here, along this $13, $14 area. This was a nice move, 1-2. Really, he's got to get going here. He's got to go, start busting up and out of here. So we'll see if the trade war news or any other further news on interest rates will start to move this market. One thing we did start to notice was that international started to outperform U.S. in this last 2 months. So if we get our buy signals back, clear all that resistance, we're contemplating putting more in the emerging markets. We haven't decided this yet. This is still discussion points here, but you see this a monthly chart of the SPY divided by the emerging markets. When this is going up, you want to be in U.S. stocks, which we were in U.S. stocks the whole time through this. And then U.S. stocks started to outperform again this year because international has been terrible. So any of those life cycle funds or asset allocation funds got really destroyed because they have almost a third of their money in international. But it's good that we key off these things and look at this because you see how it turned red? This is a monthly chart. So that means for the last month or two, I would have to drill into that. But maybe, yeah, that's a couple of months. EEM is actually outperforming the U.S. stock market. It doesn't mean that it's up. It just means that this rate of decline in this last over here, the S&P has been acting worse than the emerging markets. And let me show you this other thing about it. So it's been down. Emerging markets are down. I think they're down about 30% year to date. 20, maybe it was more closer to 20%. But here, this is the EEM all of 18. We've had barely any. We have a little exposure in some of those ETFs, a little international, but very little emerging markets. And clearly, we should not have been in emerging markets. However, you see what's happening here? You see the black volume in here? You see the black volume in here? It's buying pressure. It's accumulation. And this is all my ribbons of the 50 and 65 days. If we just draw a trend line, you see where we are? Depending on how thick I make my crayon, we're right there, okay? So now this looks technically like a safer type of situation. I showed you the S&P, right? We're under that resistance. There's a lot of sloppiness. This has got a clear downtrend line and a little bit of accumulation in here. All that black you see in there, okay? And possibly going to break out here. And then I showed you the relative strength chart. And again, folks, not me. This is not opinion. This is the facts. For the facts are emerging markets is outperforming the S&P for the last 2 months. So we're keying on that. If it's a risk-on situation here, they work something out with Trump, of course. This would probably be good for China. Let's go look at that. If they work a deal out this weekend. So again, there's nothing we can do here other than guessing, and I'm not guessing. So we need to actually see what the reaction is in the market and then see it break out. But this is the China market. Still kind of, still looks like EEM basically, right? Along this thing. Emerging markets looks a little better, but if China gets a trade deal, I've seen Chinese markets up huge. Look at this downtrend. It's very clear. If this Chinese market could break, right, you could see it right here, right above this, all these moving averages and this trend line. China's going to be on fire, and there's a lot of scale here. There's a lot of points if it wants to move up next year. So again, that's why we're keying on these emerging markets, and it has to do obviously with this China tie-in and everything. But we think that might be a play if we get our buy signals next week. So that's something I wanted to show you. I think that's all I really have. See how the market's doing. It's the end of the month. End of the month, we usually get some move up. We're getting a little bit more of a rally, but man, we're right under that 250 day. The pink is the 200 day. You guys see it in there? And the red is my 65 EMA, and this is the ever important 65 day simple moving average. So let's see. It's do or die time. It's really up to Trump and the president of China, in my opinion, looking at this. That will be the catalyst to either get this turning right back down again hard, or we're going to see a bust out, a breakout here. And then again, we'll probably be taking the blues off this chart and still working with this red situation, or possibly even this green situation where we're going to explode and keep going up to new highs next year. Okay, so let's let the market be the judge, and we'll go from there. So that's all I have this week. Everybody enjoy your weekend. We got got a little colder down here. We got some snow up in Flagstaff last night, about a foot up there. So that's good news for me being a skier. So exciting stuff. Anyway, have a great weekend, guys, and we'll speak to you again next Friday. Take care. Bye-bye.